Hi, this is Jed Norwood with Forex Strategy Secrets. Welcome to the 1551 Larger Time Frame Trading Workshop. This is session 1. In this session, we're going to be covering the following topics: when the best times are to trade and how, what currency pairs, when the best times to trade and how to trade them, what currency pairs will serve you best and when to follow them, and give you some characteristics of those currency pairs so you can understand what to look for at certain times of the day, using the 4 hour, 1 hour, and 15 minute as your setups, and then also using the 1 hour, 15 minute, and 5 minute as your setups. We'll also talk about entry and exit signals briefly, and I'm going to introduce you the concept of recognizing a stall out signal so that you can watch for these particular slowings in the market to be able to time your exit and or a potential re-entry or adjusting your stop so it protects your profits. So we're going to get right into that. Let's go into the session 2. So then in session 2 we're going to be covering again the 4 hour, 1 hour, and 15 minute setups and the 1 hour, 15 minute, and 5 minute setups so that you can have a little bit of a review there. We're going to talk about trailing stops, how to use those so you can trade transition zones, and we're going to do long-term scan summary. We're going to talk about the different scans that are on the scanner so you can understand which ones to use for this and why, and we will answer questions at the end of both sessions. Okay, so let's talk about the pairs that serve me the best, and I feel that they have been helping our students the most in the trading that we're doing. This is not just my own philosophy, this is feedback from several other students, Kirk as well, as to what we're finding in the market and what works best. We have the pounds and the euros that tend to be the best. The CAD, Aussie, New Zealand, and yen counter or cross currencies. In the pound CAD, you're going to notice, well, here on the chart you're going to notice that I have certain sessions marked in red and certain in blue. The red is where those pairs tend to have the most strength without too many variables. The blue marks where they're still tradable, but there's some specific characteristics that take place. The pound CAD and Euro CAD tend to be a little bit more flat during the Asian and European transition, and the pound yen and Euro yen tend to be a little bit more slow to get started in the US session, but do pick up about an hour and a half after. So that's we're going to talk about that in a little bit here. But you can trade these pairs any of the sessions that are going on throughout the day. You can trade any of these pairs during any of the sessions throughout the day, but just recognize that there are some weaker points at certain sessions for a few of the pairs. Now, with this as a caveat, we always have variables in the market. Things are going to change from day to day, news feeds, things that are happening in the markets that are just causing certain pairs to do certain things. So, and there's an ebb and flow in everything we do. So we understand that as traders, but just know that there are specific characteristics that we've noticed have kind of emerged over the last little while that we're recognizing. Cautions to pay attention to. Like I said earlier, the pound CAD and Euro CAD can be flat during the Asian session, and sometimes the pound Aussie and Euro Aussie can start out flat, but they do tend to move a little bit better in the Asian session than the pound CAD and Euro CAD, but the breakouts, you have to really plan for them. The pound New Zealand and Euro New Zealand can have spread spikes. They can go from the regular spread that the broker set up. The banks will spike them for some reason, for no reason that we can apparently tell is on our end, but they can spike as far as 20 pips. Just last week I had a trade that I set on, a long-term trade on the pound New Zealand and one on the pound Aussie at the same time. The pound Aussie stayed in, and I did really well on the pound Aussie, but my protect profit was at 15 pips on the pound New Zealand, and I watched the spread spike up past my stop and take me out and then drop right back down to where it was normally, and the bid didn't even move. The ask was what jumped. And so it's really crazy. So keep that in mind. That can happen. I ended up jumping back into this one and making up for that loss with a decent move. So it's not something to shy away from, because the pound New Zealand and that pound Aussie, and even the Euro Aussie and Euro New Zealand, really move really well, and so they do pay off over time. So don't let that scare you, but just recognize that it can happen. The pound yen and the euro yen can be pretty volatile and change directions really fast in any session. So you just have to be ready for some really wide swings sometimes in there, some channeling, but very tradable. You just have to be aware that they can do that and not give you any warning, and the other pairs will just be a gradual trend one or the other while the yen pairs are doing what they're doing. So characteristics of the pairs overall, the pound CAD, pound Aussie, euro CAD, and euro Aussie are easy to read in general. The breakouts and trends are really strong. The pound New Zealand and euro New Zealand can be a little bit hairy when they're channeling, but strong when they trend. And the pound yen and euro yen are easy to read. Best in the US session if you wait the first hour and a half roughly after the session starts. Somewhere between an hour to an hour and a half, it'll start to give you some really decent moves. But other than that, they are easy to read and trend well, but can be a little bit volatile in trying to pick a direction. So those are some of the overall characteristics of those pairs that we've noticed in our trading, and this should help you to gauge what's really going on in the market when you happen to be looking at specific pairs. And I'm not afraid to trade any of these pairs on the screen. I trade them all throughout the week, week in and week out. So I don't have any particular favorites as far as which ones I gravitate to the most, that the others don't end up getting the same amount of time in front of the screen with me. So let's look at the dynamic, or the now let's go look at a screenshot of an actual trade I took prior to this recording, prior to this session, that we'll kind of dissect it as we go, starting with the 4-hour chart. You can see here that the criteria for this was I had to have a fresh cross on the filter or a fresh color change. Here it ended up being a fresh cross because the color change had already happened, and it was on the correct side of its own 34 moving average. On the 1 hour, you can see that it was a fresh cross and it was on the correct side of the 4-hour moving average, but not its own. And that's okay as long as you have that 4-hour confirmation and the fresh cross on the filter. The 15-minute had a fresh cross and a fresh color change, and it was testing the moving average and did finally break it. The 5-minute was a 4-bar and a fresh filter cross, fresh Mayo cross, and had crossed its 34 moving average as well. On the 1 minute, you can see that we had the fresh color change on the correct side of the 0 line, a fresh cross, proper color here, and it crossed 2 of its moving averages, so we were able to take that position for 48 pips. Okay, so let's talk about the long-term core signal that is required in all of the setups that you want to look for when trading larger time frames and trading long term. On the 4-hour, you need to have a fresh filter cross or a color change. It doesn't have to be a fresh cross necessarily, but you do need the fresh color change for sure. If it is a fresh filter cross, then it's even better. And it has to be on the correct side of its moving average. Okay, so the criteria here is the fresh color change and correct side of the 34 moving average in relation to the color that it is. Okay, the fresh filter cross can happen as further confirmation or a stronger signal. The 1 hour filter fresh cross has to happen, and it has to be a fresh color change and be on the correct side of its moving average, or as you saw in the dissect of the previous chart that I showed of the trade, at least on the correct side of the 4 hour moving average. If you can get the moving average to be on the correct side of the price and the color changes there, that's even stronger, and that's what you want to try to shoot for, but you have a little bit of wiggle room there with the 1 hour moving average. So what I'm going to do now is go to the charts and show you what that 1 hour looks like and why we have this set up the way we do. You need to have an additional moving average on the 1 hour chart. It's not necessary to have it on any other chart but the 1 hour, but it gives you that 4 hour moving average so that you can make that determination. Okay, let's go to a 1 hour chart right here. So you see here we have the 1 hour moving average right here. It's giving us the 34 moving average on the 1 hour, but then we have this other one here. This is a moving average you set up on the 1 hour chart. It's a 125. So let's go to the properties on this. This is what it needs to look like when you set it up. Normally when it defaults to all time frames, you need to click that off and select the 1 hour only. That way you don't bog down your other charts with additional lines that aren't necessary, because you only need to see it on the 1 hour. Keep things clean. Okay, so that's how you set that up. Okay, let's talk about the long-term setup. What you need to see, and we have scans created for this, so the scans will help you, but you need to understand the DNA of this setup. So we're talking about the 4 hour, 1 hour, and 15 minute. The 4 hour needs to have a fresh filter color change and or a fresh filter cross. The fresh filter cross is always stronger, but it only needs a color change to be good, and it has to be on the correct side of the moving average when we're talking about price. The 1 hour needs to be a fresh filter cross and a color change, and it's best if it's on the side of its own moving average, but if it's only on the correct side of the 4, that's okay. The 15 minute needs to be a fresh filter cross and a color change, and needs to be on the correct side of its moving average. Now if you're getting a fresh signal and it's flickering back and forth, or it's not quite where you think it should be with one of the moving averages, go to the lower time frames and confirm the next pieces of information. That 15 minute, you need to verify that it's on the correct side of its moving average. If you have the fresh color change, that's also good and preferred. If it's flickering back and forth, at least make sure it's on the correct side of its moving average. And then give it time. You're not jumping in right away. You have time on these types of setups. Drop down to the 5 minute. Check for a fresh filter cross and a color change that's fresh as well. You want that price to be on the correct side of the moving average and the filter. That is critical. The 1 minute needs to be a 4 bar, and it needs to be a fresh cross color change, and needs to be on the same side of all 3 moving averages if it's going to be a trend signal, or at least 2 moving averages if it's counter trending. So now let's talk about the 1 hour, 15 minute, and 5 minute setup. The 1 hour needs to have a fresh filter color change and or a fresh filter cross. It needs to be on the correct side of its moving average, and that's very critical on this 1 hour, 15 minute, 5 minute setup. Don't deviate off this one. The 15 minute needs to have a fresh filter cross and color change and be on the correct side of its moving average. The 5 minute needs to be a fresh filter cross and a fresh color change, and on the correct side of its moving average. If it's fresh and flickering back and forth, drop down to that 1 minute. Look for the 4 bar, wait for it to be a fresh cross. If it's already happened and it's late, wait for the fresh one. Another one will come. And you want it to be on the same side of all 3 of the moving averages if you're looking at a trend pattern, or at least 2 moving averages if it's countering. Okay, so let's go look at the charts. Here I'm on the Pound New Zealand 4-hour chart. Okay, I've marked 4 filter, color changes, and fresh crosses. Okay, filter, color change, fresh cross, filter, color change, filter cross, filter, fresh cross, color change. Okay, we're going to go look at each of these and grade them out based on tradability. All right. Now, if someone were to take a 4-hour filter fresh cross signal without looking at any of the criteria, you're running into some potential risks. So I want you to at least be able to focus on the fact that you need to still grade these out to determine how tradable they are. Okay, let's start with this first one. I've got it marked with my anchor. We're going to go to the 1 hour. You can see that the 1 hour signal didn't show us anything here yet. Okay, but in the 4th hour of the bar, the 4 bar, the 1 hour gave us a signal. And it didn't happen until it crossed its own moving average, and it gave us the fresh cross. This was most likely a news announcement, and it moved very fast. Could it have been tradable? Maybe, maybe not. You would really have had to have been watching this. Okay, let's go down to the 15 minute and grade it out further. Aha, here we see 45 minutes into that 1 hour bar, we got a gap that took place between that bar and the 4th bar, when the 4 bar actually gave us the cross of the filter. Okay, this would have made it really hard to potentially take a position there. Had you entered up here already off that 15 minute, it might have worked. But here's what my concern is with this one. I'm going to mark this as a reference point as to when it crossed its moving average. Go back up to the 1 minute or the 1 hour. It hadn't crossed it yet. Okay, so it would have been a little bit tricky to time that one. I probably would have been nervous getting in on this move had I had to wait for it to cross that 1 hour moving average. Let me show you what I mean. If we mark right here at the top of this bar with that gap there, that makes me nervous. It finally did cross, so it's very plausible that you could have caught that if you were timing it properly. Might have worked, might have not. This one's questionable. It looks great on paper, but there's a few things that make me a little bit nervous. That's okay. It still is a fresh cross of the 34 moving average and a fresh filter cross. We're going to get more. Okay, you're going to have plenty of time to look for this at another time. This was during the European session, so a European trader or someone trading that session might have been able to capture something here. There are some other signals in here using the lower time frames based on the 4-hour trend to get in on some re-entry signals based off that being a fresh signal. Okay, we'll talk about that in a little bit, but I want to talk about just fresh 4-bar filter crosses. Okay, so let's go to the second one. Okay, let me get rid of these two. Well, I'm going to keep one of them. I'm going to keep this bottom one. I'm going to move it here just so we can have a reference point all the way across for the rest of these examples. Okay, going to this one, we had a fresh 4-bar filter cross. Go down to the 1 hour, and it's on the correct side of its moving average and the 4-hour moving average, and it's a fresh color change. So we would drop down to the 15 minute, and it is a fresh color change, fresh cross, and it's testing its 34 moving average. So here you would see that we have the fresh cross, but we didn't get the 4-bar signal until clear over here, right at this point. That's your entry for this segment. So going back to this 4-hour bar, you enter on this one. Let's go to the 1 hour. 1, 2, 3, 4. So you're entering in this one on the 15 minute. 1 hour after the bar, or so on the second hour of that 4-hour bar. Okay, so here's the first hour, second hour, third hour, fourth hour. That's still a fresh signal. That's tradable. So there's your entry. That's a doable trade. Let's just say we got into it about right here, just in the middle of the bar. And you've got plenty of time to set your stops, take profits, which we'll talk about in session 2, and let this work for you as a trending pattern. Now let's go back up to the 4-hour. There's another fresh cross here. Let's just look at the overall trend just to kind of get an idea what this particular trade would have done. If you would have been in this one and still in it, you would have had 205 pips down to there. If you stayed in it still, it would have been further. But from this entry down to the first stall out pattern, which we'll talk about stall outs in a minute, and then getting the first color change on the filter going the opposite direction, roughly 190, 180 pip range. Okay, somewhere in there. It could have been as far as even 220. Alright, so there's some decent move in there. So if you would have had this position and this position, you're looking at 400 pips. Overwhelming? Don't let it beat you up. You're still going to have to use proper money management. Okay, you don't want to over leverage your account. You don't want to not trade with a trailing stop or some kind of a protect profit, because these larger time frames can have a lot of volatility and you don't realize it because the price bars, the volatility is hidden inside each price bar. You can't necessarily see it like you can on the 5-minute and 1-minute. So there's some good moves to be had there, and we've only talked about the first and second opportunity at the cross since the cross of the 34 moving average on the 4-hour. We still have 1, 2 more, and there's possibly another one here that developed just recently as well. So there's plenty of opportunity here. So let's go look at this one now, and we'll come back and talk about stall outs in a minute. Okay, so going down to the 1 hour, we have it's a 4-bar on the 4-hour, and it's a fresh filter cross. We drop down to the 1 hour. We're going to see that it's on the correct side of both moving averages, and it's a 4-bar as well. That is a prime entry point. But notice what happens. It starts to stall out here and give us some grief. So you're going to notice that certain things are taking place, and we're going to go look as to why. So let's just kind of get a range as to where this was, mid-range. So there's about 93 pip move. Okay, you could have caught a good 14, 30, 20, 25, 30 pips in there, 50 maybe if you were lucky, and cautious. But then it starts to stall out on us a little bit. We need to find out why. What's going on here? So let's go back up to the 4-hour, because that's a strong 4-bar pattern. And that's a 4-bar pattern, a very strong one as well. So let's see if we can see what the difference is on a lower time frame. Aha. Notice how the signal wasn't quite there on the 15 until 45 minutes later. And there is a very tradable position right there for about 100 pips. Okay, so let's mark this as our entry point. We have a nice tradable pattern. I'm going to actually come back and use each of these examples for finding stall outs in a second here. Let's stay with this task here and finish this through on the 4th bar here. Dropping down to the 1 hour, you can see that the 4-bar, you can see that the 4-hour formed here. It was on the correct side of both moving averages on the 1 hour and on the 4-hour. We had the cross. See if this one has a cross too. Break even on that one. So the very next bar, so an hour into the 4-hour bar, would have given us the 1 hour signal. Then it's dropped down to the 15 and graded out. There's our 4-bar pattern right there. Okay, so we can take a trade right there. And this is the kind you love to have right here. This is what we all dream of. 319 pips. Okay, so let's talk about the stall out. I'll talk about stall out signals from this one and going in reverse back to the very first one. Okay, the thing that you're going to notice with a breakout pattern, most of the time there's going to be In a stall out pattern, what you're going to find is typically within the first 2 or 3 bars, you're going to have a color change take place. So in this case, it went a lot further. You've got red Heikin Ashis and maroon price bars. It goes 1, 2, 3, nothing happens on the 15-minute, but it goes 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 before you get a color change. Okay? In this particular situation, this stall out pattern, this stall out signal came after the first signal, warning signal for us to close, which is the color change on this particular bar right here, but we also got one over here. So we're going to drop to a lower time frame to confirm where our stall outs are on this particular point, because see how these price bars were shorter? There was something happening there that we need to pay attention to. Not that it means we get out, but we just have to be a little bit more cautious. But a stall out signal is this: when you get a price bar color change that happens after a move up or a move down, you need to start looking for your exit signals. In this particular situation, the drop dead exit signal happened at the same time, right there. Filter color, male color change, price bar color change. So that was a stall out and an exit signal all at the same time. But let's identify this particular situation prior to the stall out on the 15-minute and this color change on a lower time frame. So let's drop down to the 5-minute. You can see here that we had a little bit of fluctuation in color changes, and it's really just trickling at this point. So this is just a trickle pattern. I'm not too worried about. When it breaks out like this really strong, start watching for the color change again. Okay, there was a potential exit signal there, and 3 bars later we got another one. This confirmed an exit signal as well. That doesn't mean that you want to exit on a lower time frame if you've already got profit protected and you're in a strong 4-hour downtrend or uptrend, in this case downtrend. What it just means is you want to tighten up your protect profit, bring it to a range where you have some stability. So if I was trickling down here and it shot down and it started fluctuating with these bars here and getting the signals down here, I'm just going to move my protect profit to probably right there. That's what I would have done there. And that would have assured me at least 100 pips profit while I let it run to see what else I can get. And you can have a trailing stop that follows it as well. We'll talk about stops later. But that's what I would do with the stall out signal. This one is kind of an anomaly. Most of the time you're going to see them within the first 3 to 4 price bars after a breakout. So let's go back up to the 4-hour. Let's go back to this particular price bar and look at the stall out signal to see what it can tell us. Here we had the move down and we got a stall out signal. That happened right away. That is a warning sign that something's not right. So let's drop down to the 15-minute and see what we had here. Perfect example. If you're looking at the 15-minute chart and you enter here on your trade, you have 1, 2, 3 bars. This one started to come up, so you get this long tail. It shoots down and starts to trickle up. That's an early sign that you're most likely going to get a stall out signal on the next bar, and of course you did. It changed color. But also notice what else you got before the stall out signal is a color change on the filter. So if I were seeing this, I would probably take profit on that somewhere on this bar and wait for a potential re-entry later. And they do come. It doesn't take much time. Alright, so let's go back up to the 4-hour. We'll move our anchor over to this other one right here. Dropping down to the 1-hour, you notice here that we have 1, 2, 3. Our fourth one gives us stall out. Now again, that doesn't mean we have to close. It just means that it's starting to rest or retrace. And in this case, I would have just probably been tightening up my protect profit to make sure that I didn't lose much or any at all. You can always re-enter off a new signal. I prefer that in these larger time frames. In the smaller time frames, you're going to be in and out, in and out. That's understandable. But in these larger time frames, give it some wiggle room. If you can protect profit, and in this case we would have had roughly, it retraced 37 back up to 20, so that's 17 pip retracement. I don't know if I would have necessarily had a lot of profit protected there, maybe 5 pips. I typically like to wait for it to move a little bit further if I'm watching the market before I actually initiate my trailing stop. But if I had initially set that up, that might have taken me out. We're going to talk about how to do that differently, but if you're setting it up properly for a larger time frame, that shouldn't have hit that or triggered that at all, so you'd be okay. But when you get a stall out signal, usually a lot of times these will come. In this case, this one did. It came at the same time as this cross or color change right here. So this is an anomaly pair, I guess, because normally you'll see these, and most of the time it'll be on much lower time frames. This 1 hour is not necessarily going to give that to you, but here on the 15 you did see it. Okay, right away, so you could still capture some decent moves on that. The beautiful thing about this particular method is that you can trade larger time periods, capture larger pip counts. If you're using proper money management, you don't have to have big drawdowns or retracements. These are doable. These little moves right here, these are easy to handle and deal with. What happens is when you start getting bigger swings with bigger price bars with larger tails that are changing back and forth, this is when you want to get out and you want to start waiting. So here's an actual stall out that actually makes sense. Right in here we get some off points here. There's different things happening that's causing this to create this back and forth pattern. This right here, this is a signal we used to call, and still is something I refer to, is a 3-bar early bird. Okay, this is a warning sign that we need to start looking for things to happen. And notice how our Heikin-Ashi does change color after this pattern develops. This is a very strong stall out signal to pay attention to, and our filter's already given us exit signals like crazy. Okay, right through here. So what's important here is that you pay attention to those fresh signals. Fresh being that inside the first 4 hours of a 4-hour bar, you're going to find potential patterns on the 1 hour and the 15 minute. If you have to, drop down to the 5 and even the 1, but you can time some really good entries. Manage on a larger time frame. Manage on the 15 at least, if not the 30 minute or the 1 hour. It'd be great to manage on, because then you can see things developing in a little bit of a slower pace, but then you'll be able to get your stop set properly, which we'll be able to talk about next session. What I'm going to do is do some more examples in some bonus videos that I'm going to provide for you that will give you a chance to see both long and short trades playing out in different currency pairs, and give you a chance to refer back to those as well as this video for further study as you are working through this larger time frame pattern. If you have any questions, please email us so we can address those issues. In the meantime, practice this out, play with it, set up your 1 hour chart with the moving average, and see how it works out for you. This is Jed Norwood signing off.